Hey folks, Vic here with your weekly trade video. And by the way, happy Thanksgiving to all of our American friends and your families. I hope you have some nice relaxing time off to just reflect on all the things that we really do have to be thankful for. In this video, I'm going to show you how to get high reward risk trades in the Forex very quickly, like usually within a few hours or even less. But listen, make no mistake about it, you have to do it right or you will burn your account very quickly, and we don't want that, okay? So let's take a look, and if you like this video, and maybe you'd like to see more of them, just let me know by hitting the like button, and I can do that. Also, be sure to subscribe to our channel. There's a button in the lower right corner of the video. Alrighty, here we go. So the way to get very high reward risk trades is to either keep the initial pip risk very small and get a quick move in your favor, or risk more pips but have a huge pip profit target, right? So both are legitimate ways to trade, and in fact, getting large pip profits is exactly what Darko shows our longer term members how to do, and he's done that very successfully for years now. But I run our short-term service, and the way to get big reward risk returns with short-term trading is to risk a very small amount of pips. Your initial pip risk is very small, which is particularly great for small account sizes. And when you can do this, you don't need much of a move in your favor in order to remove risk and or take profit. That's all about trade management. So let me show you a typical example of a short-term scalp trade that gives you really, really nice reward risk potential. And of course, all of this usually happens within a few hours. Okay, and this trade was on the US Canadian dollar pair on Tuesday, November the 22nd. And so let's have a look at it. So our time frame combinations are for scalping our daily 4-hour, and then our entry is 15-minute. And we also reference the upper left screen here. That's my weekly chart. We reference that as well. And you can see these levels I have marked here are very, very good levels. Just a heads up, by the way, this level down here, you want to watch that. If price comes back down to here, or if and when it does, I'm going to be very interested in looking for a long trading opportunity if it sets up. Anyway, back to the daily chart. Why have I got this line marked here? Well, the reason is because if I go back, that was a heck of a level. In fact, you can see it for a long ways back. Look where my cursor is moving along, how that level kept getting, there was action around it. And in fact, right here, look, I mean, just look at this. It was really, really good. Touched it here and here and here and touched it again here. I've moved it off of the bodies of the candle a little bit because I adjusted it on the 4-hour chart, which is one of the things that we do. We will make slight adjustments. So on the 4-hour chart, this is the same level. Here you can see where I adjusted it to the top of this, or I could have put it to here. You can see how it's support and it's resistance. That's excellent. The question is, when price breaks above it and establishes above it like this and comes back down, what does it do when it hits the line? What is this? That's a pin bar reversal. Okay, now it actually happens to be what we call an ACAT, Advanced Candle Action Trade setup as well. It qualified for it as well. So what we do is we go down to our entry time frame 15-minute chart and look for a trade. Okay, we look to get long because that's what the candle action is telling us at that time. So we go to our 15-minute chart, and that pin bar reversal I just showed you on the 4-hour chart happened right here. Right, see this move up here? That was the top of that's where the pin bar reversal happened, and then price dropped, and then it rallied. This is where we want to get in. Then there's different ways to enter. The thing is to be consistent how you do it. You can buy it just back at the support resistance line. You can buy a Fibonacci retracement, which is what I prefer to do. There's just different ways. Any other little support resistance levels that you like, you can go for as well. Well, what I do is I like 79% retracements, and the reason I do is because when I buy 79%, I get because this level right here is what we call a natural stop. I need my stop to be under here. It's where the market naturally stopped, and I want to give it a little bit of leeway underneath there. So when I buy a deep retracement like 79%, I don't need much of a pip risk, right? If I bought it up here at 38%, I still need to put my stop under here. That's a huge pip risk. Well, that's too much. Now maybe you like 50%, 62%, whatever it is. Be consistent. That's all I'm saying. And I like too, when we rallied up here, we broke these little micro swing highs here. Again, this is scalping, so that's what we watch, these little things. So the entry was down here. It needed a 12 pip risk to put it under here. And also, I actually look at the volatility stops as well, because for a higher volatility pair, I want to be considering a higher pip risk. It just makes sense because the volatility is a lot higher. And for small volatility pairs, we can have less pip risk. So in this case, on this pair, on this day, I needed 12 pips, which never even came close to getting hit. And a 12 pip stop when price rallied up, just up into here. And this happened in like 1 hour, right? That's a 2-to-1 reward risk trade just up to here. That's pretty darn nice. If it had come up to this level, which is the 127% extension, it would have been a 3-to-1 reward risk. And if it had hit the 162% extension, it's a 4-to-1, right? Nothing wrong with going for those. It didn't make it. Obviously, it went down. And so how you handle this trade is going to be an individual thing. But certainly there's a 2-to-1 reward risk in this. And you can, assess the higher time frame trends and all that kind of thing. I won't go into that here. I just want to show you the idea behind getting high, how to get high reward risk trades. Okay, so that was just an example of how we do it. Now listen, in the very near future, I'm going to be introducing some additional, very simple but very powerful trade strategies to our short-term members. We have some back office logistical issues to work to take care of first, but do stay tuned because I've already recorded over 40 videos to go along with the new content. So you'll be able to see the trade setups over and over, which will greatly help our members get up and running very quickly. Okay, and just so you know, I have very, very objective rules of how to trade these upcoming setups. Okay, I never say 100% objective. I mean, for me, it feels 100%, but I don't, it's just not the way it is with any trading. But I tell you, it's pretty darn close. Okay, so yeah, I hope you enjoyed this video. Please give it a thumbs up if you did like it, and you'd like to see more content like this, and I'd be happy to do that. So really, it's a matter of having a consistent methodology for short-term trading that allows you to take on very small pip risk. That's the key to it, with large reward potential. And I don't know if you noticed, but this trade actually made a 2-to-1 reward risk profit without even breaking that swing high on the 15-minute chart that we use to measure the retracements from. So learning the skill for identifying trade setups with super small initial pip risk can obviously be quite a powerful way to trade. Alrighty, let's leave it at that, and please don't forget to hit the like button. Hope you all have a super weekend, and wishing all of you a great week of trading ahead. Take care.